All right. Good afternoon. Good morning, Hawaii people. Good day. Happy hump day. Happy Trump day. Happy whatever day it might be today for you. All I know is it's Private Money Club Money Tank launching tomorrow, going through the weekend. Can't wait. Charlotte, North Carolina. A bunch of the pretty faces you see on here right now are going to be there as well. So hopefully you'll be there either in person or watching virtually. It's going to be an awesome event, but more of that a little bit later on. Right now, if everyone can get in their questions in the comment box, I'm going to play a little video. I'm going to fix the branding that I never fixed from this morning on here. And then we'll do a quick around the horn and we'll get to all of your questions here shortly. Be right back in 14 seconds. All right. Welcome back, everyone. Thanks for being here. Ask me anything. We're going to answer all your financial questions. So before we get there, let's just do a quick introduction. If you're new to the show, we do this every Wednesday, 4:30 p.m. Eastern. It's called happy hour because, well, I don't know. I'm a pretty happy person on Wednesdays at this time of the day. But if you're into drinking alcohol in the middle of the day, grab a drink, have some fun with us, maybe a coffee, something of that nature, whatever you're into. We'll start with Mr. Brain Farts right next to me over on the left side. What's up, Brian? Welcome. And you just had to move, right? So what's going on?
Yeah, Brian Foucher. Yeah, so calling in today from actually northern Idaho now instead of Washington State. So this is my new home. Moved over here on a Friday. It was a tumultuous adventure of a move. I won't get into the details, but man, it was crazy. But glad to be here and got a lot of work ahead of us, fixing up a house, making it our homestead, and it'll be an adventure. So going to document some of that. Gosh, going to be using infinite banking for a lot of things, actually. We're going to be doing some renovations, so we're going to be using infinite banking for that, some things like that. So it'll be fun. I'm going to kind of share how that works. But with that, I'll pass it over to, I don't know who is next.
All right, we'll go right below you to Mr. Jason Sipple.
Oh, right below. We got a panel of 10. This is more than the Brady Bunch. I am here in the City Beautiful, which was a red state, which I was very happy to see yesterday, other than Jacksonville, which we're just going to let, go out into the sea. So excited to move forward, see what's going to happen next. And I know it took a lot of pressure off a lot of people, the election. A lot of people were up late last night. Some people drinking, snaggy, maybe. So let's have some fun, answer some questions, and go from there. I have no idea. Just figured you might be. Over to Joe, Mr. Helock.
Over to me. Well, I'm Joe. I'm up in Buffalo with Chris and Shauna, and just got back from the Ohio RIA that I'm still excited about, meeting all the people and getting to talk to them the rest of this week and next week. And then we're getting on a plane tomorrow, heading down to Charlotte, and I can't wait to meet my peeps down there and chat and talk and hang out and drink and party and have fun. And then we'll go next door to Linus.
Okay, Joe. Okay, thank you. Hey, Linus Nolt here from Hopkinsville, Kentucky, running on just a couple hours of sleep, last night. Yeah, always helping more people get policies, understanding the infinite banking concept, which actually comes first. But yeah, happy to be here, help answer any questions I can. Move over to the new guy, you're back. Hey, Andrew.
All right. Well, Andrew learned how to use Zoom and how mute works. I will introduce Andrew. So Andrew is the
there we go.
the tech brain behind PMC. So not only is PMC Money Tank launching tomorrow through the weekend, but the new PMC platform is online. It's awesome. And we're going to talk a little bit about that today too. But go ahead, Andrew.
Absolutely. So yeah, I'm Andrew Chestnut. I'm the director of training and education, as well as technology for Private Money Club. And we literally I just messaged with the developers. We had a bit of a hitch today. It's all cleaned out. Money School is going live. You guys are getting emails from me in a moment here to let you know. So really excited that we just kind of rolled out the newest version of Private Money Club. I'm here to support and just kind of showing up to whatever webinars. And this is always my favorite. It's great. So absolutely glad to be here, guys. Gabe Bueller. Gabe.
Oh, Bueller. Yeah. They always run right past me, so I never get to do an intro. So happy to be here. Great day. first morning, in a very long time. I can't even remember the last time where I woke up with just a sense of calm and sense of serenity. Just very blessed, good day. And, I think now we can shut the political side off, and now we can get back to just, teaching people how to take back control and be the bank. And that's what I'm here today to do, is just help everybody do that. Can't wait to see some folks out in Charlotte, North Carolina. But before I go to Charlotte tomorrow, I'm off to Puerto Rico. Hopefully that tropical storm hurricane thing goes around where my plane's going, but gonna be a good time here. Pretty excited.
Guess I'll jump in. My name's Gabe. I run a jiu-jitsu school that I use my policy to finance. I'm really excited now because I was able to get a property under contract for me and my family to go live on. It's a farm, and I'm going to be able to pay for the down payment with my policy, and then eventually move my jiu-jitsu school over there, so I no longer pay for my rent. So I'm going to chop off like $4,000 a month in cash flow expenses that I can now use to eventually like roll back into policies and keep this thing going. So I'm here to learn and maybe help answer questions if because I've tried a lot of different ways, and it's fun to see it work, and trusting Chris and all the other mentors and Brent, because it's really changed my life for sure.
Cool. All right, Miss Decker.
Mama Bear.
Miss Decker.
Hello. It's me, Shauna. I'm just excited for the weekend. I probably won't sleep tonight because I'll be, waiting for tomorrow's flight to Charlotte and then setting up for the event. And then I'll see you on Friday. That's it.
Cool. Awesome. Well, I was trying to do stall here, get some questions in. So I just want to throw some questions over in the comment box. We got some good stuff coming in. And Chris, we always joke around about Jacksonville, but maybe your Jaguars could at least win a football game. That might help a little bit, but we're not here to talk sports, so get the questions in. And of course, leave it to Mr. Stinky to throw in a little stinky comment, but it's all good. And so let's see. Drew's going to be there in Charlotte. Who else is coming to Charlotte? Oh, wonderful training videos. Awesome. Thank you very much. All right. So Crafty Papa, I love the name Crafty Papa. What can I do with a $50,000 Lira Canada?
Well, first of all, that would need to get converted to U.S. dollars or Canadian dollars, and then from there, you can do stuff with the infinite banking concept as far as a policy goes. Anybody else want to take it from there?
Yeah, I mean, up in Canada, you can do the same thing. So, if the IRA is based in Canada, the rules, are pretty friendly for doing private lending straight out of your IRA. In most cases, the custodial company that does your IRA will allow that. I'm a little out.
Chris, I think maybe, he says Lira, Lira, isn't that what it says? That's Italian money, I believe. I may be wrong. It might just be a mistype.
Yeah, it could be. So I guess we should get clear. Is it Lira? Because then I went with Canada. I just assumed it's the IRA. Just made the assumption. So we might both be off, but who knows? But you could get two answers on one. So who knows if it's
Canada is called
government
a
account.
Retirement account, a Lira.
Yeah, it's a government account, government retirement plan.
Government retirement plan in Canada, correct?
Yeah. Yep.
Yeah. So just double check with them, if they'll let you do lending straight out of that account, then you could do that. If not, if you're still employed by that company, I don't know if they'll allow you to move it into, I'm trying to think of the name of the account in Canada. It's been many, many, many years since I spoke up in Canada on this stuff. So, me and Andrew are a bit kind of rusty on it. We used to put together presentations for speeches that I did in Canada, talking all about all this stuff. That's how I met Stefan Arnio for, Hard Times Create Strong Men and Hard Times Create Strong Women. But that would be what I'd recommend. Find out from your custodian, whether or not or what your freedom is with the account. Can you lend it direct from it? Can you own real estate within it, or is it literally just capped to allowing you to just buy the mutual funds that they put in their little menu, which is very much like it is here in the U.S. And if that's the case, find out if you can roll it over to one that gives you more freedom.
Double check with your custodian, but most Canadian retirements, like TFSAs and things like that, are self-directed. So there's a lot more flexibility in Canada than there is here in the States. So
the
just
TFSAs,
FYI.
yes, that's
TFSAs and What's the other one?
You know,
RRSPs.
yeah, the
RRSPs, I think is what it is.
RRSPs. Yeah.
Registered Retirement Savings Plans. Yeah, RRSP. Yeah.
Good job, Andrew. Good memory. Remember how long ago that was?
It was a long time ago.
Oh,
That's what happens when you have Canadian family and you talk about stuff like that. So. Mom's dual. So, yep.
All right, cool. Let's see. Eve's going to miss the event, but Duck V will be there. Very cool. Lori Halter and John will be there. Brent's flying out first thing in the morning. Awesome. All right, Sean said, how does a policy grow by using it if the PUA amount is fixed? Would the return in, say, 30 years be the same?
So are they saying, like, if you can't add more PUAs, how would the policy grow?
yeah, I'm not
Well,
really.
the PUAs are added in via the dividends. That's one way. So that's consistent. How else are they talking about?
Well, I
I
mean,
think he's
it's
talking about
compounding
using
interest
it.
is the answer, I would think.
Yeah.
I mean, even though the PUAs are fixed, I mean, you determine the PUAs when you first set the policy up, and we build them within the MEC limit, you know, so it's going to be a fixed amount you're putting into the PUA. But even when you stop putting money into the PUAs, all that money you put in is already compounding, working for you. So that's how it grows. I mean, it's just the mathematics behind compounding interest are really the way all of this goes. And then as time goes on, your policy gets more and more efficient because you got more and more money compounding.
I think
think
he's
what he's
talking
asking
about
is-
non-direct versus direct. He thinks if you take a loan out, you don't make dividends and interest.
Well, I think the question here is, how does it grow by using it?
Yeah.
Question.
I don't know what the question is. I'm
I'm
bowing
gonna
out
say
on
maybe
this.
Sean
I'll
can
get back
talk.
to Nancy Lewis's question
What is the question, Sean Webster? What is the question?
because I feel like we could spend 20 minutes on this question, all getting it wrong because we don't understand it. Hey, Sean, could you
There you go.
rephrase the
Yeah.
question just to kind of ask it a bit differently so us idiots over here can figure out what it is you're asking?
He did right there.
Okay, so it's gonna from that, it's gonna depend, Sean, on kind of what the design is, what company it's with, and how much additional PUAs can go back in. Like if you're trying to pay yourself back extra interest above and beyond what the market value is for that, or the money that's coming back into it.
I mean, that's just an exercise right out of becoming your own banker, you know, where, you know, you're going to exceed the capacity of your first policy for sure. As you start becoming the bank, using it, you will exceed the capacity. I mean, you'll be putting the money in for the premium deposits. You'll be repaying the loans, which you can never put in more than you took out plus the interest. So that's why you expand your banking system. That's why you add branch office number 2, branch office number 3, and that keeps pushing your capital base and your capital limits higher in your banking system. So I think the way to do it is just not to think of it as just one policy is going to serve you for your life or for 30 years. It's going to be a system of policies that make up your banking system, just like traditional banks, because there's never just one branch. Even credit unions have more than one branch office, and your banking system will be no different over time.
And Chris, I love all of that. And Sean, I love where your head's at already. You're already learning how to be a banker. How can you put additional monies back in, like Nelson talks about? And like Chris was saying, you'll get to the point where, you know, this is a 12-ounce mug. Can you put 16 ounces of water into this mug? 2 people have told me yes, they cannot be clients, but everyone else who understands that, you know, you're going to need a system of policies, like Chris said. But you can also, after the policies in force, ask the questions and put more back in to make it maximum efficient too. So I love that your mind's there already. Linus getting several more. We got more questions. Here we go.
Yeah.
Are we going to get back to Nancy's up at the very, very top? Got missed.
Let me see.
She was the
Very
very
first
first question.
Oh, what is your first move? So Nancy said, what is your first move now that we have a new president going into office?
I'm surprised this question hasn't been coming up all day long. Because like literally, you know, now that, you know, we know Trump won and we know the Senate and looks to be the House as well is going to go red. Like, what are the things that we should be looking at, you know, now and, you know, into the coming months that we should be preparing for? And I think I haven't really been able to unpack this. I definitely would never have told you that if Trump, or never even dreamed of a day whereas if Trump won, the market would have rallied 1,500 points on the Dow, almost 3% on the S&P, almost 3% on the NASDAQ, and the VIX would drop 20%, signifying that literally like all the risk that people thought there was in the market and the volatility has just dropped off the face of the earth. So I think that's a really good sign, but I also think it's a false indicator of hope. If you just understand economic cycles and you just understand market cycles, you will understand that it's not a president that controls where the markets go. They certainly help. Their policies will 100% the economy. But unfortunately, President Trump is going to be taking over an economy that is on a severe decline. I mean, if you've been paying attention to the fake job reports and then the revisions to the job reports, you will understand that things are on the slide down and will continue to slide down. I think his policies will help that in the longer run, but I still don't see a way because of everything that's already been done and because of where we're at, where we avoid a recession. Now, I hope I'm wrong. And you know what? If I'm wrong, Trump is definitely the reason we're not going to a recession. But I would still say set the course for preservation of principle, set the course for a very conservative look into the coming months, or at least the next 6 to 12 months. Play it safe, and then just build up your banking system. Be very conservative with your loans that you're doing. Banks are still tightening up. Banks are still not lending the way that they should. Interest rates are still relatively high, even if the Fed does continue to drop. We're on a downward slide, and that's what I would prepare for. Don't let one day of the market a rally. We're all excited today. I mean, there's no one that didn't wake up on the right side of the bed today. At least from this team. But don't let that overshadow the fact that we're still in some rough territory. Trump's going to have a lot of work with his team, to do. The tariffs will not immediately be viewed as a positive because they will definitely directly impact inflation and keep inflation a little bit higher. But that will be a good thing. And one last thing on this, and I thought this was a really good thing to talk about. Somebody, I think it was on WTF, somebody earlier had said, or it was a comment on a post we just put up, had said something about the tariffs. They had mentioned the tariffs, and then somebody else had mentioned, well, he's just going to drive the deficit up. Both presidents or both candidates will drive the deficit up. There's no ifs, ands, or buts about that. The deficit goes up. And what I said back is I said, fixing the deficit problem is more than a 4-year job. Like you can't do the deficit any justice in the 4 years. The deficit will go up for the next 4 years. Mark my words. But the policies put in place in the next 4 years will make it so that our kids will not have the burden as much as we do. God, I even hate using that word. I just said burden, didn't I? Damn. But anyway, they will not have that weight on their back like we do if the policies are set, if they're put in place. Then in the future, I really do see a day where we start getting the deficit more under control. I just don't see it in the next 4 years. I really don't.
I'm also holding off until any sort of plans. I want to hold off and see who else he has on his cabinet, because I think that's going to make some differences. Like, who are his advisors? Who are the people who are going to start guiding the country? We know a few of them already, but I think to really make an informed decision, I want to see how that pans out over the next couple of weeks or so while the transition team takes over. So we'll see.
Play it safe.
Great answer. My answer was much more simple. My first thing I'm going to do is drink a bunch of these. Leftist ears. Drinking them up. First thing I'm doing.
Didn't somebody also comment that they were going somewhere to do that too?
Yeah, exactly. All right. So next question. How soon are the funds available after an annual payment is sent in? Policies with Lafayette and is turning 2 years old. Congratulations.
I can tell you from experience with Lafayette, it's typically within 2 weeks. But we do say usually, within 30 days.
Very good. Leah says, is it okay to take max cash value loans like the chiropractor for several years and only pay policy loan interest to pay down debt, then pay the policy back?
Yeah.
Yeah.
That's what you're supposed to do.
I love it.
So now the debt is not living on your credit report. It's living inside the policy. So now what did that do? Increased your credit score, decreased your DTI. Now you have extra cash flow. Now you can pay yourself back and recoup that money.
We get this question a lot too. I would say people are confused because we always talk about the segregated bank account. And it's like, should I repay my bank account or the policy, or when do I move the money from my bank account into the policy? Like, how does that actually happen? And I think it's very situational. If you have other debts you want to pay off after you paid off the first one, and now you're paying yourself back, well, sure, you could put it in the bank account, move it to the policy, and then take another loan and keep it flowing. But if you're going to be taking it right back out the next day to take out the next debt anyways, you might not need to pay back the policy. You might want to just leave it in the bank account and go straight to the next debt immediately. But if you have, a massive mortgage you're trying to pay off, maybe you repay the policy and then take a loan every 3-4 months. And so it really depends on the debt you have and what you're looking to do.
Can I jump in on this? This is a really good topic. One I think we should spend more time with. And it's one that doesn't have a definitive answer, which is where I think that this comes up a lot, Carson. And I'm glad the way you handle it. But I think sometimes when you're setting up your own banking system and you're learning this, especially in the beginning, I'm just going to go back to when I first learned this. It was brand new to me. It was rather difficult for me to wrap my head around it because I was deeply entrenched in the traditional financial system. So how I did it is I learned. I take a loan. I started off paying off debt. I paid the debts down. I recaptured the money back to the segregated account. But I just conditioned myself to learn one way because it's just so much easier just to follow one set of instructions, learn them well. I mean, if anyone goes to the gym, like when you get used to a routine, you don't think about it. You just do the same thing, and it becomes easier and easier. It's like that with everything. So that's how I did it. And how I did it in the beginning is I worked on a quarterly basis. It didn't matter if I had cash value in the policy. Every quarter, I set my map up so that a loan was taken out, paid down the debts. I would cycle that for 30 days, look at how much I saved on the statement. You could do this much quicker today because you could just log in. Back then, I just dealt with paper statements. You see what the difference is. You recapture that back to the segregated account and then just fill out just literally print out, have the I team print out a bunch of loan repayment forms for your insurance company. Just keep them in your office. So every quarter, when you take the loan, you pay down debts, or you take the loan every quarter and you do something with it and it turns a profit, then you just increase the loan repayment. So like if you were paying $200 a month back to your policy on a recycle recapture, and then you pay off another debt and it frees up another 100, then you just go in, fill out a new loan form, take the 200 from before, add the 300. I literally teach it this way, but just get used to completing the circle. I know you're playing financial gymnastics, as Brent Kessler would call it, with the insurance company, but you know what? Who cares? Just follow the circle. Money goes out, money comes back into the policy and then gets redeployed. And just think of it, on the fastest at a quarterly basis. It'll make your bookkeeping and everything else easier.
All right. Good stuff. I'm with Sean on this one. All right, wake up. Here we go. Knights of Israel says, my cousin who sells life insurance said he knows about IBC, but he said it's not for everyone. What questions can I ask him to see if he makes them right?
He's totally right. It's not for everyone.
Just remind you of that.
Yeah, it's not for everybody.
It reminds me of everybody because everybody's got a cousin that is either a realtor or life insurance. So I don't think they're any special. They're not special that their cousin sells life insurance.
Right.
I also had a friend of mine who one day he's got a pretty high net worth, and the financial advisor told him that no, IBC is only for the very rich. And it's like, what?
Well, that's the answer though. I mean, it does start with the company itself. So it depends who's an agent with. Not all life insurance companies are able to create policies this way and allow you to take loans uninterrupted and everything else. So it starts with the company that he's an agent with. And then somebody want to add to that?
Yeah. And here's the best question.
Yeah.
How does he use infinite banking in his own life?
Bingo. Best question ever.
Yeah.
I'll second that.
Yep. If he doesn't, move on.
Yeah.
Yep.
So Knights of Israel, you can always schedule a call with us. We can kind of talk you through that a little bit more and make sure it's done right. Because we do make a pretty significantly reduced commission on these as well. So it's not about the money. You know, even if he built it for you, he's not going to make much on it probably anyway. So, you know, I wouldn't do it as a financial thing just because of your cousin, and make sure it's done right. And remember, this is for life. I understand family is life too, but this is your financial future. So you want to make sure that not only is it set up properly today, but how are you going to use it in 6 months from now, a year from now, 5 years from now, 10 years from now, when you need changes made to it. You know, this is all we do all day, every day. So, you know, those are all things to consider as well. So I'll put a link in if you want to schedule a call with our team. There you go. Thank you. Cool.
And also for DM8 or DMN8TR, I never know who that is. It says, hey, Chris, let's get started on my first policy. Make sure you use that link and book a call with us.
Yeah, good call. All right. The next star is That's What She Said. Are there any strategies to help lower my tax bill besides real estate while using the infinite banking concept?
Well, we can't give tax advice, but I mean, lower your tax bill. You could always work with your CPA to figure out like what type of qualified retirement plan could work. I mean, a SEP sometimes for a small, you know, closely held company could be really beneficial. You can put a bunch in. A solo 401k could be good, you know, and I'm referring to self-directed custodians for these. So you wouldn't want to go to Schwab or things like that, although you could go to someone like Horizon Trust and do that. That way you can still be the bank and lend. The other thing too, I mean, you can always look at a charitable remainder trust. And again, this is all check with your CPA. You got to be at a certain level, you know, of income where that's going to really benefit you. And, you know, I think the ultimate, you know, at the top that most people should consider, and I think more CPAs should advise their clients about, is really looking into private foundations, setting up a private foundation that you can put up to 50% of your income into and get a deduction for it. Now, remember that money's gone and it's in the foundation, so you have to give it. But just think of it this way. Any money you put into the foundation is money the government would have taken from you anyway. So it really wasn't your money in the first place. You might as well do something good that means something to your heart and give and teach your kids to give with money that the IRS would have gotten and squandered somewhere. So that's the way I look at things. And don't forget to get a good CPA that is creative and will use things like Augusta rule and 179 deductions and take advantage of cost segs and everything else that you can. I mean, sometimes CPAs seem to, and no disrespect to them, but I've seen it more than less. They tend to just give you the basic normal answers. Well, let's put money in an IRA. Oh, well, you're taking your gas deductions and your mileage deductions. I mean, like, there's way more creative stuff you can do. You just got to find a CPA that's willing to spend the time to do the tax planning with you, not just your tax returns.
Cool. All right. Any expectations from Navigate Your Ventures of the elites to throw a wrench in the economy once President Trump is in office?
Of course.
Always.
Of course.
Yeah.
Lori says she's so adorable. Tess, Lori, I don't know. There are multiple people on here. Okay.
Kids. Linus's kids.
Yeah, Linus's kids are so cute, and then Tess and Lori.
They keep waving.
Thank you. They said thank you. And this is on behalf of them, by the way.
Your daughter's name's Tess?
No.
I'm so confused.
I think Tess is with Lori.
All right. Nancy said, hi, Nancy. If we have a holding company that's a disregarded LLC, can we use a checking account in that company name as our segregated account?
Yeah, absolutely. I had to read that. Holding company is disregarded LLC, can use a checking account in that company name. The only thing I would preface is if
probably
Who owns
not.
the policy?
well, hold on. There's a little bit more to this. So if your policy was owned by that disregarded LLC, like if it was a COLI policy, then yes, you would use a checking account from that same entity. But again, you wouldn't really want to cross streams. If your policies were owned personally, you wouldn't send the money to that disregarded LLC's bank account and then try to take it back out. I mean, number one, you could, but it'd be just a bookkeeping nightmare.
Mm-hmm.
All right. Yeah, I mean, checking accounts are free too. So it's, just grab a free checking account. Just something to flow money through. All right. So Lori, who's apparently Tess, but it's apparently, I don't know.
You got it, Steven. You got it.
Susan asked, Lafayette loan interest went up to 7% on some of the policies. I heard someone on Chris's call say the dividend rate went up 0.45 points. Does anyone know the interest and dividend rate total payout?
What is it?
For
575 now? Lennis, you know what that is?
I feel like Craig might, and he's not here right now.
Lafayette's dividend, Linus.
Oh, I had seen it went up. I don't remember what it was.
Yeah, it did. It went up a lot.
Yeah.
7.5, I feel like is right,
Yeah,
Chris.
575, I think, is where it's at. For some reason that's in my mind.
Yeah, I think I remember seeing 5.8.
We both could be right. Who knows?
And by the way, I saw Gabe jumped off, but tomorrow, just quick public service announcement. Gabe and I are starting a 9-week, infinite banking, black belt training, white belt to black belt. Come learn infinite banking from 2 martial artists. So it'll be fun.
I'll be a special guest.
I just got a crazy letter. It's kind of sad. So this letter is to McDonald's Corporation. It says, "Dear management at McDonald's, please accept this letter as my formal notice of resignation from my position at McDonald's effective Monday, January 20th, 2025. During my tenure there, I've enjoyed the opportunity to serve our customers and contribute to the fast-paced environment of this establishment. From flipping burgers, this is nuts, to making fries, to managing the drive-thru. I've learned a lot about how a restaurant business or how to run a restaurant business and value of hard work. I want to thank you for your opportunity to be part of such an iconic American brand. The experience has been invaluable, and I am grateful for the skills I've developed, which believe will be served well in future endeavors. I am committed to ensuring a smooth transition during my remaining time here. Please let me know how I can assist in finding and training my replacement in and at any capacity to help maintain a high standard of service at this location." Who is that letter from?
That is brilliant.
Who is that letter from?
I'm guessing Trump.
Donald Trump.
Yeah.
Letter.
That's great.
All right. Anyway, sorry, I had to do that.
Speaking of, have you guys heard about my friend who got arrested for having a manatee?
Oh boy.
What was this?
Oh, we don't need that. They would need that one.
Sean said thoughts on long-term policy funding over surrendering cash value and dividends to cover premiums.
I think that's a terrible idea.
I think Sean,
Sean, that's what I have to say about that. It's an absolute terrible idea. You're basically saying that you're still viewing premiums as expenses, as a payment, where you're not looking at it as a deposit. Because I've never met a single person, never once have I met a single person that wants to make less deposits into their bank. But that question is saying, how can I find a way to make less deposits? In other words, how can I stunt the growth of my banking system? How can I make less money? How can I earn less? How can I compound less? Like, that's a mindset shift we got to get over.
I think he's really thinking about traditional and thinking about
that's just a mindset thing, right, Joe?
Yeah.
Or is he asking literally, does it make sense for us to use dividends to pay premiums for us long term?
Only in an emergency where maybe you're pinched for cash and you're trying to find out, like we've had to do it literally probably, on one hand, the amount of times with all 16,000 clients where we've used dividends to support the premium deposit. And that's usually because of a temporary situation, like real estate investors deal didn't close or income, or layoffs or something like that. But it doesn't happen often. And that would be the only time I'd ever suggest surrendering cash value or using a dividend to make your premium deposit.
Especially in year 11 when you're depositing.
And just call Joe and he'll give you a loan for 64% interest, and you'll be happy to pay him 64%.
I mean, our policies, 99% of our policies are 200 to 300% cash on cash in year 11.
That's why I wasn't kidding when I said they'd be happy to pay you your 54% interest.
Yeah.
That is usury, man. Usury.
All right. Any more stars? Here we go. That little brown dog. Hopefully it doesn't live in Ohio. All right. Can you clarify where the internet goes? Can you clarify where the internet interest goes that I paid back for a policy loan does it all go back to the insurance company? How does it put more money into my policy?
One of the most common questions. Who wants to answer it?
You.
So it goes back, that little brown dog, not in Ohio, goes back to the insurance company. They're your partners. You're an owner in a mutually owned dividend paying whole life company, which is an everyone thrives situation. So when you're paying them back, they are making money from you paying them back. And then from them being more profitable, they're most likely going to have another year when you get a dividend, which gives you more money. So it's a nice cycle there. But if you pay more than the interest rate, the 5 or 6% or 7% of Lafayette that you're paying back to them, then that's what's going to go into grow the policy in addition. So that's the second part of your question there.
Cool. I need people to understand that this is two separate entities. A, we're depositing into our policy. B, the insurance company's general fund is lending us money based on our deposit. It's two different entities. So now we're making money in the deposit with the dividends and interest. When we pay the interest back to the insurance company, that's for the borrow. Now, what are we doing with that borrow? We're paying off debt. We're investing. So if we're investing or paying off debt, now we're going to recapture that back to ourselves. That interest that we're paying the insurance company is going to be minus from the arbitrage of the investment. So we borrow $100,000 out of the policy. We make 12% on it. We pay 5% back to the insurance company. We made 7% on our investment and the payment back to the insurance company, yet we still made money in our policy. Two separate things.
I did the webinar I did today, which will be up on YouTube soon, really does a good job of covering this. You know, this is a common question. I mean, there's nothing wrong with this question. There's a lot of interest that we talk about. We talk about the interest on the policy, the guaranteed interest the policy earns, and that's earning that uninterrupted. Then there's the interest on the policy loan, which is simple interest. And then there's the interest on, you know, your money working for you in private loans, paying off debt, cars, things like that. So there's technically 3 interests you're talking about. So it makes perfect sense that this, you know, the little brown dog, you know, like they get confused and they start thinking, okay, well, how does this make sense? Because what they're thinking is I take money out of the policy, but they're not factoring in the fact that their money's still in, you know, compounding in the policy. And then they got to pay this interest to the insurance company at 5%. So they think that 5% is diminishing what they're making, but it's a simple mathematical thing. And the webinar does it. So if you're earning a higher interest rate on the policy than what you're paying, you're making a spread, kind of like a bank, a traditional bank. You deposit money in the bank pays you 1% interest. Bank turns around and lends that money to James here at 5%. Bank makes a spread. You are making a spread on your money because the interest that you're earning is more than the interest you're paying. And then the third interest is the interest you're earning on the money, which is earning that a second time. Because remember, it's earning once compounding in the policy and it's earning twice out there working for you. So really, like the 5% or 6% or whatever the interest rate is the insurance company's charging you is moot point when you understand the mathematics, which again, that's just an exercise in watching a video or two and you'll see how the math works.
All right. Good stuff, man. Chris Snow said he's one of 10 realtors in his area. Reminded me yesterday, I saw somebody, they said that they've seen so many yard signs lately, they think they voted for a realtor. So there you go. See how I do it. Says, why not take $100,000 from my HELOC to fund a policy, then immediately borrow max amounts from the policy to pay down the HELOC and shift my liability into the policy instead of owing the bank. So we're so close, Joe, right?
You were almost there, brother.
It wouldn't work like that, but I love where their mind's at.
Yeah, you were almost there. Because now you're going to create a double hole, I call it.
Yes.
You're taking the money out of the HELOC, interest there, putting it into the policy. And when you take it out of the policy, now that's a hole you have to fill. If you would have said, take it out of the policy, put it into an investment, and have that investment interest come back to fulfill that full circle, I would have given you a gold star.
He would have given you a big kiss on the cheek.
My gold star.
But yes, utilizing the HELOC for the policy into an investment to come back full circle, absolutely. That's what I do.
That's what Joe does.
That's what I do.
All right, Jojo. Let's see. Jay says, Joe. Whoa.
Where to
Jay
go?
says,
Sorry.
Joe, does the CMT rate follow prime rate? How much fluctuation goes on with the first lien HELOC?
So it went up and it came back down. It is the I forgot which they use. It's an index. And they put I think it's right around 2% on top of the index. Today, on our calls, it was at 8.18%. And it's going to go down. It went up a little bit, and she's coming back down again. So,
Isn't it,
go ahead.
isn't it tied to the 52-week average of the 10-year T-bill rates? So basically the prime, and then they add a couple points to it.
I don't
Usually
know
what mortgages are. I just don't know HELOCs really well.
Yeah, I don't know exactly which one they use. There's a specific one that they use.
Boy, Andrew, if they use that, holy cow, mortgage rates just went way up today.
Yeah, usually mortgages are based on it is either the LIBOR rate or the 52-week average of the 10-year T-bill. So yeah, I see them going up.
It's some kind of index. I just forgot what Jason said today.
Okay. HELOCs may be different, so I may be incorrect. I'm at a mortgage end, not HELOC, but yeah.
Yeah, I can find out though next time.
Yeah.
All right. So when it said Lafayette's new dividends 5.75%.
Oh, going off that, can you jump down to Susan's question? I don't think I'm going to be one asking that, but it goes off of that answer.
So if Lafayette is charging 7, I'm making 5.7.
Ooh.
I am no longer making a spread. Is that correct?
We did I hate to keep saying we did a video on that, but we did a video on that. Me and Craig literally did the math showing, we didn't even use 5.75. I think we used 5.5 and then paying 7%. And then we showed the differences on that. So is it a consideration? Absolutely. It's definitely you should consider. But the thing you're failing to understand there in that, and it makes sense like the way you're saying it, but you're missing the fact that your money is always compounding. So when you do the cash on cash return year over year on the new monies you're putting in the policy, because all the old money is still there compounding, even if you take the loans out, your interest rate on your money goes up over time. But I agree. Like, listen, like the 7% Lafayette's charging is a factor. It definitely will result in making less spread down the line, but it is not as big of a factor as just considering it. If I'm making 5.75 and paying 7, I'm losing money. This is stupid. That is definitely not the case. And I'd have to have Shauna or somebody else find that wealth webinar that me and Craig did. I think it was 2 weeks ago, if I'm not mistaken, where we showed the math on that. And depending on the use of the money from the policy, for debt pay down, it really didn't make hardly any difference. For private lending, over time, it made a difference, but not a huge difference. And I'd be willing to bet that Lafayette is, from a competitive standpoint, is going to have to come off of that 7% here, probably in the relatively near future, because what that will do is severely stunt their growth. I've heard it from many top producers that write with Lafayette that they're going to have to find an alternative. And I'm not saying we're finding an alternative, but we're definitely putting less business there because of that than we're putting more.
But don't you make more at 4%? And paying 6%.
Well, that's what I was trying to explain. Yeah. Is like because of the mathematics of compounding interest, like you're still making money at 7%. You'd make money at 8% too if it was 8%. But what I'm saying is, would I want to be with Lafayette at 7% interest or One America at 5.2%? I'd rather be at One America. But if you already have a Lafayette policy, like there's no need to jump ship, because like I'm sure the rates are going to come back down, and even if they don't, you're still going to be able to make money with that policy. So it's kind of mood point, but It's a good question. It's coming up.
Susan, give yourself the gift of going and doing the math and learning yourself. Like, watch the video Chris is talking about. For me, this was like one of the biggest sticking points when I was learning IBC and just trying to wrap my head around how things work. But if you get like a time value money calculator and the compounding and you do the math, you can borrow at, let's say, 6 and you can earn at 3 and still make money. I mean, you can almost have a double to what it is until it starts going the other way where you're not making money then on that spread. So it might seem like you're losing 3, but you're okay. It could be, you could be paying 8 and earning 4 and still make money. So
it's the system. Just like when velocity banking is applied in a HELOC, that HELOC rate is not 8.24. It drops to like 5.35.
So we're asking her to take on faith and taking on our experience. And I'm just saying, like, give herself the gift of going and proving the math to yourself. Because when your brain, it's like when I was watching Craig and you and people presenting in Nashville at the Money Multiplier event, someone would say a math problem and my head would just stop there. And I'd stop listening for the rest of the things. My brain's trying to figure out that one thing. You know what I mean? So if she's stuck there, like if we're helping her on a call and she's stuck there, even though we know it's true, even though we've proven it, we show it in videos, if she just gets the calculator and does it, she'll be able to play around and say, oh, this is when I stop making money. This is when I make money. That's kind of my point.
I've told her that.
Yeah. Oh, so you've worked with her. There you go. So that's her sticking point. This is her thing that says, I don't get this. So that's cool.
You can still make more, 3%.
Yeah.
So.
Susan, don't let Joe click and pop at you.
It's the system. It's the system. Don't
Chris,
worry about the numbers.
Was it a webinar where you talked about interest rate and velocity of interest with Craig?
Yeah, I think it was 2 weeks ago.
Oh, 2 weeks ago. Never mind. This one was a little bit longer ago.
Maybe it was.
They talk about this a lot. I mean, this is not. This is
maybe it
Well,
was.
here's one. I'm gonna put in the chat and start there.
Something else in there I'd like to point out. So she put in there 5.75 dividend plus 1% equals 6.75. I might be misunderstanding that, but isn't that 5.75 the total earnings in the policy? That other 1% might just be her thinking that's the guaranteed interest rate, as if it was in
addition. 2, I thought.
Right, it is, but no, that's included in the 5.75, right?
Yeah, you don't get the guarantee when there's a dividend higher than the guarantee. If they said that the dividend was 1.75, you would get the guarantee of 2.
I think somebody needs to get on a call with Susan and just
I'll call her.
set up a call her, walk her through the numbers, walk her through the math.
It'll be at 10 p.m. because I'm booked.
This is just not a good platform to go that deep down the rabbit hole and explain that, but it's a very easy explanation once you can draw it out.
Yeah.
We like rabbit holes here.
Very little ears.
Yeah.
Rabbit holes are rabbit holes.
I ran over a possum.
Rabbit holes.
As long as you don't have one in your house, and in New York State, they come and take it and euthanize it. Oh, was that?
Yeah.
That's squirrels. Yeah, it was a little.
That's squirrels and raccoons as well.
It could have been a rabbit. Hey, raccoons, squirrels, rabbits, all 4 little critters.
Usually in the morning we have rabbits running from our bikes, and they're super fast. But the other day it was all possums. I don't know why, but there was 4 possums, and I actually ran over one of them's tails. I didn't see it. It just moved so slow. It's not a rabbit, that's for sure. So
in the possum in the daylight.
It was not hurt in my cycling. There was no possums hurt. It was okay. It made it back to the woods, but I did run over its tail. Scared the crap out of me.
And like the solution to everything is play dead. And I don't know if that works really well with bikes and cars. That's my thought.
No, this one did not play dead, Andrews. That was not true. It ran once I hit it. So,
Peanut. Okay.
If you ran over Andrew's tail, I bet you he'd run too.
All right, let's bring this back up.
If I had a tail, I'd run too.
Here we are.
We're buying you time. You brought the next question up, brother. Oh, we did this one. Yep.
We did that one?
Yeah, we did that one.
How about this one?
And it's heavy, not heave.
Somebody, I saw a question somewhere, Stephen, that somebody was asking about commercial HELOCs.
Yeah, rental house.
Here, I'm gonna put that in the chat. Brandon went through and found all the banks that do lines of credit on commercial real estate.
Awesome.
Brandon is awesome.
Mm-hmm. If you could send that, that'd be great to me too, Chris.
Right there.
All right. First Bank, Omaha, PNC, Wells Fargo Bank.
CMG Mortgage is another good one.
Brian Richardson said, if we are just opening a policy with Lafayette, should we ask our advisor to look at One America instead?
I don't know. I mean, you can compare them. I mean, Lafayette's still a great policy design.
Yeah. So there's a lot that goes into it, Brian. So your age, your health, the amount of the premium, and what your goals are. So it's not, again, the loan interest and the dividend rate and things like that are probably the least important part about having the right policy for you. So we could definitely look at that for you, but you're probably in the right place if they went with Lafayette to start with. Is that fair to say?
The reason why I choose Lafayette, especially when there's a big dump in, because with Lafayette, you can run that dump in for 7 years.
Yeah, looks like you're with Mike Samet, so you can chat with him about it. But if Mike chose Lafayette, it's for a good reason.
I just don't think it's not as big of a deal, and the math showed that in that webinar. You know, that don't let the, what would be the word? Don't let the interest. Yeah, just don't, I wouldn't jump quick just because of that interest rate.
Wow, man.
I just Mass Mutual. Sorry, and then I got a note that my interest rate went down this year. It went from 5.75 down to 5.
Right.
Yeah, Mass has been making some different changes, but I literally just was like, thought I was in a time warp. I was like making sure, like, did I miss a month? I looked at my dates. I was like, the election was just yesterday. There's Christmas trees in the background on this. Is it December? What's going on here? I'm so confused.
It's technically after Halloween, so
there's no hour-long AMA. I'm just super confused this whole time.
Stephen, I was confused about that as well, but Shauna did say that it was okay to decorate in last Friday's meeting. So, which I didn't agree with, but hey, I could argue with Mama Bear.
I'm going to give myself a sub caption because this is not going well for me today. All right.
Yeah, don't trip over the dollars to pick up the pennies. That's what I was trying to say. See, Chris picked it up.
All right. Anderson Draw said, hey, guys, if you're going to be in Charlotte, we will be. If you guys got free time, head over to the dirt track. This weekend is the final. Yeah, Anderson. So actually VIP. We got 80 tickets, and we're going Saturday night as a group, 80 of us. So if you'll be there Saturday night, we'll be there, and I'm really looking forward to that.
Yeah.
That does sound like a lot of fun.
Thanks for the heads
Speaking
up.
of which, does anyone know what the weather's like in North Carolina? Like, how should I pack?
I looked. It's actually like in the low 70s in the day and like 50s at night. So it's beautiful.
Okay, perfect.
Oh, cool.
And Anderson, the event itself is actually at the Charlotte Motor Speedway in their press center, like where they do the press events and things for races. So we're like in there where like the racers and stuff go. So it's gonna be really super cool event.
So Chris, remember your race suit, the fireproof suit?
Well, we actually were gonna do that and we didn't, but we probably should have, but maybe next time. All right. Have you guys used a first lien HELOC?
Nice.
I've heard of one.
Talking about rabbit holes.
I've been doing HELOCs and velocity banking since 2010, Chris. So yes.
All right.
Send me an email and we'll have a strategy call.
All right. We're at the top of the hour, so make sure I didn't miss anything here.
But there was one from Scott, I think was his name, where it said heave capitalization. It meant heavy capitalization. I don't think we really answered that one. I mean, it was the same guy that was asking about having dividends pay premium after certain periods.
Cool.
Yes, Chris, was the bank, the First Savings Bank. I just started mine. I was telling Chris, I was telling you about that. I started that process and learning how to do that myself. So.
Ooh, this is perfect to get into IBC. Yeah, you don't even need to do a dump in. Just get the thing started $400 a month, and then as you get more money down the road, open more policies.
Yep.
Build that banking system. But $400 a month is a great starting point for a new policy for sure. Just schedule a call with us. We'll take care of you.
Pay yourself first. Be in control.
Cool. All right, guys. Well, appreciate everyone being here, and safe travels, Chris, out to Puerto Rico and back to Charlotte. We'll see you Friday night. Joe and Shauna, Andrew, see you guys tomorrow evening. And I'll see the rest of you guys very soon via Zoom.
All right.
Everybody that's on, thank you for being here. We have quick start webinar, of course, tomorrow at 1 p.m. Eastern. So if you're not flying and on your way to Charlotte, I'll put the link to access all of our weekly webinars. Again, we do 6 live streams every single week. So you can register for those, join us on YouTube like you're watching right now, or on Facebook, and hop on those. So tomorrow is the PMC Quick Start. That's an hour-long educational course on how to do private money lending and how active investors can take advantage of private money to scale and grow their real estate investment businesses. That'll be with Noah Harris tomorrow. And hope everyone has a great week. Take us home, Chris.
All right. Well, I can't even find where my thing went. There we go. All right, folks. Thanks, everybody, for joining us for another episode of Ask Me Anything Happy Hour. We'll see a bunch of you out in Charlotte. And for the rest of you, well, you could watch us live stream the event. See you next time.
Peace.